Good afternoon. Let's give it a couple of minutes until we have more people joining. I see quite a list being populated. So I'll just go on mute for 1-2 minutes. Perhaps while we're waiting, I have to say that we're all very humbled and pleasantly surprised by the fact that we had 180 people or so subscribing to this webinar. I would say partially surprised because the topic of AMCs is something which is well known basically in the market. Maybe not so much the, let's say, Gen 2 additions or implementation, but nevertheless, it's not a new topic, right? It's been around for quite a few years. Nevertheless, very happy to see such a large number of, people being interested in what we have to discuss here today. So I see we have already quite a few people, so we can start. And by the way, I hope now that June arrived, everybody's looking forward to a fantastic summer, right? This is the third webinar we do. Maybe as a quick recap, first one last year was already on the retail offering, the public distribution offering that we enabled. Second one was some time ago on the AMC, or let's say structured products investment solutions without bank issue risk, which was also very well received and got very, very valuable feedback from that. So now we have the, let's say, AMC focused version. Now, this webinar will be followed from another one at the end of June, 22nd of June, whereby we'll be talking about the possibilities and the futures of our platform, right? And then there will be one more in the beginning of July about the private markets. So, by the way, I see some people asking already. We will have a Q&A at the end of the session, as always, whereby we'll be very happy to answer questions. Last time actually was we were thrilled by the number of questions we received. Yes, the webinar will be recorded. We will upload it probably by tomorrow or so with a quick recap, so that for the people that was not possible to be to watch it live, to get the content right. So without any further ado, the agenda for today's session will be a quick recap of how we have been doing. It's been few months since the last time we talked about what we see in the market in terms of inflows, products, etc. Then for the people that would either be the first time to see that, or a quick refresher, what is virtually an AMC, right? I believe most people know, but we would still spend a couple of minutes, not more, on that. And then basically we will go down into the AMC Issuance platform, what we virtually enable for our clients, and then even a bit deeper on what happens around it, what possibilities somebody has, how are fees being charged or calculated, what are the possibilities for company or an asset manager or a bank to get basically additional revenues, etc., etc. And so we will focus quite a bit on the setup, but also the commercial, let's say, real life example. How can somebody use an AMC, and how do the counterparties who are involved in this can basically generate revenues for them, right? With regards to the numbers, the quick update. So we have been covering quite a bit the inflow we see in the market, right? We're at the moment in dollars at about 2.8 billion across all the products that we have in the platform. What I believe is quite nice to see, as always, is on the bottom right, what I believe is a healthy diversification between asset classes, right? So by public, we mean liquid assets. We mean assets such as equities, bonds, FX, etc., that somebody can buy and custodize through a broker, right? This is typically, I think, for most asset managers anyway, the bread and butter, the largest portion of their business. For us, it's about 44-45%, trailed by the private markets, which is also quite significant, right? I think what is probably the largest piece of news within this slide is the number of employees that Gen2 reached. So we are now 80 full-time employees in Gen2. As a quick, let's say, look back, about 20 months ago, I joined the company, I believe it was 32 or 35 or something like that. So we more than doubled in the course of the last one and a half years, right? Now, with regards to the counterparties we are usually in business with, you see here a selection of some of them. We have more than 250 clients and partners. Most of them, actually, probably 80% or so, are still based in Switzerland. This percentage keeps decreasing as we add more and more international clients and partners into our ecosystem. Also, of course, there are quite a few NDAs in place, so we cannot disclose all the names. Of course, we'd be happy to, but I believe you guys can get the picture of who is usually our client, right? It's only B2B, and some of these names, banks, etc., they're already obviously operating their own issuance platform, so they're already able to offer their products to their clients, right, to the investors. Now, with regards to the locations that we have been active so far, here, once again, you see rather detailed representation of the different deals around the world. So especially for private markets, you see even the differentiation between private equity, private debt, and funds or other wrappers, right? So you could say that we have been active in more or less all the mature capital markets around the world. Now, with regards to the products themselves, again, as a quick refresher, the middle category, the public markets, is virtually the main business, right? It's about 45%, and we will be focusing on that today. On the left, the private markets is also a very, very interesting topic. So that will be the topic of one of the upcoming webinars. How do we really manage to virtually make liquid and illiquid investment, right, and offer it to investors as easy as going to their bank and purchasing the ISIN versus entering into a bilateral agreement for private equity or private debt with a company that raises the financing. And of course, we have the digital offering for our clients that would like to expose their investors into digital assets, right? So again, today we'll be focusing on the middle category, on the public markets, and here we go already to the first slide about the, let's say, more specific content for today. So an AMC, as most people probably know already, is an active managed certificate. It's a fund-like instrument. Why would somebody do an AMC? Why would somebody launch an AMC? Well, if, let's say, a strategy manager or asset manager would like to deploy his investment strategy into the market and pool money from investors, it's a very handy way to do so, because it's kind of like an empty basket in the beginning. People subscribe through their banks, DVP, delivery versus payment settlement, no need for AML KYC on the end investor, because that's the role, that's the job of the banks that they're using as custodians to subscribe to the AMC. So the custodian banks of the investors subscribe into the AMC. The funds are pulled into the segregated specific account for the AMC, and from there it's possible to start trading or start implementing the trading strategy, ranging from long only, buy and hold, algorithmic, long short, etc., and also across assets, right? For the specific case of liquid or bankable, as we call it, AMC, the actual trading into the basket will always take place from the e-banking of the broker, which is selected. That is normally a bank. So basically, for the manager, it's a seamless process operating an AMC. Virtually, he would still be trading in the same way as he would do on a single managed account. But the difference here is that within the account of the AMC, there will be a large number of investors being pooled, right? So it's the most effective way. Of course, on top, the asset manager having now a product and not just a managed account. That means that he would normally have his quarterly management or admin fees. We have performance fees, and also for distribution purposes, there could be a distribution fee. There, normally what we do is on the term sheet of the product, we will mention that distribution fee is possible up to 2, 3, 4, 5%, depending on the case, right? And that means that for every incoming order, as it comes to our platform, we'll come to that later, the manager is able to award the specific order, the specific trade with a specific distribution fee amount, right? So it's very seamless, let's say, as a process. Now, on the AMC, I think more or less we're all quite aware of the mechanics, the benefits, etc., etc. With regards to why would, let's say, somebody being a larger counterparty, a multifamily office, a broker, a bank, etc., have their own issuer for the AMC? So let's take it one step back first. Every AMC, being a structured product, has an issuance entity, right? Traditionally, that used to be a bank, right? 5, 10 years ago. Now, as you probably know, with Gen 2, what we do is that for each of our clients, for each of our partners, we will incorporate standalone issuance entity that is a special purpose vehicle, an SPV, all based in Guernsey, at least for the time being. We're evaluating additional jurisdictions. So that means that each of our clients will be operating their own issuer virtually. And all these issuers are completely segregated between themselves. They're separate legal entities, and that means that they're off balance sheet and there is no consolidation risk, neither versus themselves, if they're a bank or a broker or a financial intermediary, nor versus Gen 2, right? At the moment, we have about 265 of those SPVs up and running with about 1,000 products. And the whole idea is that we put in place a standardized framework so that it's kind of plug and play for the interested parties. So the idea is that somebody would be able to have his own SPV. So you would choose the name of your SPV, the issuer, and from there you can issue as many AMCs or other structured products as you would wish. Not only the SPV is segregated, we'll come to that later, but also each of the products is completely segregated from each other. It's fully white labeled. So when you're in contact with your investors, it's basically your product. You can use your marketing material, etc. We don't need to be mentioned, let's say, as Gen 2. And for especially a counterparty which has trading and settlement capabilities or custody capabilities, such as a bank, the added benefits are quite obvious, right? So you will be able to have your trading execution fees, right, from the trading in the products, of course, custody on the assets, and finally, that would virtually mean net new assets added on the assets under management of this entity, right? Because let's say a manager within a broker or a bank would launch his own strategy, right? Or would launch a strategy on behalf of an independent asset manager. So in that particular case, any subscription that would come from the market, from the custodian banks of the investors, would end up in the same account of the AMC, which is basically managed from within the entity, right? Finally, another additional point is that with our setup, let's say somebody will have an investment idea or a thesis saying, I want to have a strategy that has 60, 70, 80% liquid assets, equities, bonds, etc., but would also like to invest a small amount or even larger one in private equity directly, or alternative funds, or private debt, or real estate, etc. So we're able to package under the same AMC, the same ISIN, illiquid assets together with the liquid ones, thus having an even more, let's say, tailor-made solution made for a specific client or for a group of clients. Ultimately, it's about generating additional business or an additional business line for several counterparties who are able to offer trading and custody capabilities for their clients. Having said that, I would like to go a little bit more technical. I believe this slide has been explained well enough a few times. Nevertheless, we also go through, for the purpose of this webinar, top to bottom, this ABC issuer, this is the SPV itself, right? So this is the representation of what each of our clients will have basically in his setup, opting after opting for their own SPV, right? So the ABC issuer is the issuance entity itself. Below, in this particular example, we have 3 AMCs being issued. The purpose of the dotted lines between the boxes is to demonstrate that each and every of the AMCs are also completely segregated from each other. Thus, there is no cross-contamination risk. For each one of the strategies, the manager is able to select the broker custodian of their choice. Thus, there could even be an optimization between, let's say if you have different asset classes, different strategies, different access to, certain emerging market bonds or something like that, you could appoint different custodians or sub-custodians. And at the same time, the alternative business case would be that a larger financial institution who offers broker and custody solutions would have their own issuer, and they will be able to offer to their clients the possibility to launch AMCs, again, in a plug-and-play way, in order to facilitate their strategies. Obviously, talking about AMCs and assets which are liquid, we're talking about managers who run these strategies which have some sort of regulated status in the jurisdiction that they are based. This doesn't have to be necessarily Switzerland, as we're in business with managers from many jurisdictions around the world. But from what we have seen in most of the jurisdictions we're active, there has to be some sort of regulated activity in order for somebody to offer to the market a strategy that is trading liquid assets. For the end investor, as always, it doesn't actually matter what is in the strategy, right? If it's fully liquid or partially liquid or illiquid, or it's a mix, there would always be the standard case to subscribe. They would contact their bank or their investment advisor and say, I would like to purchase this ISIN for XYZ amount. Then that would be an order, a subscription order coming from the custodian bank of the client to the bank, basically running the SPV or the paying agent, as we call it. It's a technical role. And then if it's not in subscription period, which is settling at issue date in the normal secondary market, that will be T+2 business days cycle normally. So it's a pretty fast and pretty, let's say, handy way for somebody to run this strategy. With regards to the end product itself, as you would imagine, we can have it in Bloomberg. Normal Bloomberg screens are available there, like this, HP, GP, etc. Historical pricing, the information about the note, the price evolution, and so on. So it is a security like any other. Virtually, it's cleared by SIX, the Swiss exchange, and that means that it's settled around the world. Of course, it is for our client to decide virtually the distribution channels and so on, right? But our goal is here to create a security that is basically has the look and feel of any security out there. For the price evolution, the portfolio, let's say, reporting of the managers, etc., is something that they can just have received a feed from Bloomberg, so that it makes things as simple as possible. Now, with regards to the offering itself, our offering, I think just the highlights are on the left side. The minimum investment amount per product is quite low. It's typically just 10 units of a specific note. Each note is usually denominated in 1,000 of the relevant currency, so that would be 10,000 euro, Swissie, dollar, etc. Increments of 1, meaning goes up to 11, 12, 13, and so on. Of course, if our client would like to increase the minimum number of trading units per note at 50 or 100 or 150, it's absolutely no problem, right? There is no real limitation in the number of investors who are able to buy the note. It's across asset classes. Here we focused once again on the more of a liquid assets, but nevertheless we can bundle any kind of asset under an AMC, right? It can even be an art collection or a vessel or a real estate investment. Typically, our offering is addressed to institutional and professional investors. As we all know, these have different interpretations in different regions, but legally we cannot have retail for the base offering. Nevertheless, since a few months, we have enabled also the possibility for retail investors in Switzerland alone. There are a couple of projects for additional markets in Europe for public distribution or retail offering, but at the moment we offer Switzerland. There, as we have seen, and it's quite known in the market, we would put together obviously everything that is required for the retail offering. So we would have, of course, the key, the base prospectus will be submitted and resubmitted every year. We would do the annual audit required, collateral agent appointed in order to service the notes, right, as required by the regulator. And we would even put up a publicly available website, unless our client would like to do so, as it's also required, right? Every retailed offered product needs to have all the product information available to the investors. Now, last but not least, we have our own platform. So all this is basically possible to be run, monitored, and executed via our platform, right? From the very first moment that somebody would like to launch a product, there is this button on the upper right, new structure request or new request. There, the platform will take you through a menu. So depending on the strategy you would like to launch, it would ask you the relevant questions. So obviously, there are slightly different questions asked if you would like to do a strategy on equities, listed equities, versus a strategy on private debt, for example, right? So it kind of guides you through. And then basically, once the request is submitted, we receive it on our side, and then we start the work. All the events throughout the lifetime of the product, such as quarterly fee payments, interest payments, planned or ad hoc, etc., are part of the platform. So there is no need for our clients to send emails, etc., etc. Not, of course, that we will, disregard them. We're always here for our clients, but the idea is that we have, the most efficient possible interaction for everything that has to do with note management. Last but not least, as I also think it's quite known, every time there is an incoming order, either an increase or a decrease for one of the note, there is an email notification in the platform saying that XYZ Bank would like to purchase or subscribe X amount of notes in that ISIN, and then there is an accept and reject button, right? So our client, the manager of the note, would at all times be on top of any inflows or outflows for his products, in and out of his products, and he will never have the situation that he is basically hit, let's say, in the market by a large trade that he would then need to rush to hedge, unhedge, etc. Everything is part of the platform. All the trades will be executed at the end of the valuation or at the next liquidity possible for the note, assuming it's illiquid, monthly, quarterly, etc. So that it's completely watertight environment. Having said that, I think that we're quite good on time. I'm very happy to open the floor for questions. So there is already quite a few questions. First questions are actually quite, I'm quite happy to receive them. So yes, all the previous webinars are available already online. Perhaps we can discuss with the marketing and reshare kind of a summary, or maybe we centralize all the material in one page, because I think at the moment they're a bit scattered. So yes, absolutely. Also, the presentation itself, yes, not only the webinar itself, the recorded material will be published, but also this presentation per se. So that would also become available as usual. With regards to open an SPV per strategy. So the question is, are you obliged to open an SPV per strategy? No, clearly no. The SPV is kind of the umbrella structure, is the issuance entity, and from each SPV, its issuance entity, we can have multiple strategies being launched. Each of the strategies are also segregated from each other. Hence, even the argument, I would like to have a segregated strategy from each other, that is already fulfilled, that's already satisfied from our setup. So if, of course, somebody would like to have multiple SPVs for whatever reason, that's possible. But typically, we have one SPV, and then we have multiple strategies under each of the SPVs. Another question on the counterparty risk. Yes, the AMC, so all the products are off balance sheet. The SPV, I mean, how is that fulfilled? How is that satisfied? Each of the SPVs is a standalone legal entity, right? It doesn't belong to us. It doesn't belong to our clients. They don't belong to the bank, let's say. It's a standalone legal entity. That means that basically there is no consolidation possibility. If one of the counterparties around the setup has any economic difficulties, it's not possible to consolidate or, let's say, get access to the assets which are in the products. Each of the product is asset backed, so it has in this case a custody account, has the equities or bonds or whatever it is booked there, and these assets are ring fenced legally from the balance sheet of the key players involved. Maybe as a quick top up, here we have been talking about AMC's, i.e. bankable securities. It is possible once somebody has an SPV to still go ahead and launch multiple other strategies, direct private equity, direct private debt, real estate, etc., from the same SPV, right? So it's the SPV, even the let's say possibility to create different products across asset classes also is not limited. Are the assets published? I presume that means per strategy or per SPV. Well, we normally just give an update to the market for all the assets that basically are serviced from our SPVs. Per SPV, there is no requirement for anybody to publish the assets. Typically, what I have seen is our clients who run their own strategies, they have the relevant information online or via nice fact sheet, and in there, normally they would inform the investors, where about the strategy is in terms of assets, performance, etc. Right? How does it work with the trading? In case the client wants to sell, how does the redemption process work? Very good question. So let's take the typical example. A manager has an equity strategy, create an AMC, the AMC goes to subscription, raises, for example, 5 million. And then we have the normal secondary market whereby the money is basically invested in equities, right? A client has invested originally 200,000, for example, and then 3 months later, he says, okay, I would like to redeem 100K out of this 200. First of all, every time a note is launched, we would have in the term sheet, as per our client's request, the liquidity offered for the specific investment, right? For the specific note. Typically for notes which are very liquid, that means that the investment manager can just go to the market, sell a part of the notional, some equities, generate liquidity, and then get somebody out. There, it can be daily liquidity, weekly, etc. Of course, we can have monthly or with some kind of delay, some business days and so on. Now, assuming that, for example, the specific AMC, we have weekly liquidity, that means basically that in case an investor would like to redeem, the investor would again contact either his bank, his custodian bank, or his investment advisor, convey the message that he would like to redeem a part of his or the whole position. So there, the investment manager of the AMC, he will receive through the platform the specific request saying, for example, bank XYZ would like to redeem 100K on this ISIN. So in that case, first of all, he still has the accept reject button, right? So assuming he clicks accept, that means that the next liquidity window, in that case, let's say end of the week or something like that, the order will be fulfilled. And the only thing you will need to make sure is that, given that in this case, the issuer would buy basically back from the investor, the AMC, right? And you would have to, in exchange, provide some cash. The investment manager, we have to make sure that there is enough cash into the strategy, typically for liquid strategies by selling some of the underlyings, right? So it's a pretty straightforward process. It's virtually exactly the same when if somebody would like to top up. The only addition is that in this case, the asset manager will need to make sure that there is enough liquidity in the cash account of the product, right? As we're being bombarded by questions, I will try to sprint through and go to the topics which are mostly not touched, let's say, so far. So one very valid question as well is, how fast can you launch an AMC? It vastly depends on which counterparties will be selected, mostly in terms of trading and custody of the AMC. Typically, I would say, assuming we don't have any extraordinary onboarding efforts for tropical islands counterparties or anything like that. So for the standard case, I would say anything between 2 and 4 weeks should be absolutely possible, but with an asterisk in the sense that, as it's been conveyed already. We as Gen2 are rather agnostic with regards to the counterparty that our client will choose to trade and custodize, which means it's a choice of our client. So if a client of ours comes to us with a new counterparty, which is not aware of our setup or SPV setup in general, and there might be, at least for the first one, some additional onboarding effort, then that means that this is basically out of our control. It might take some additional time, right? But for, let's say, the typical case, I would say anything between 2 and 4 weeks should be sufficient to launch a new AMC on liquid assets, right? With regards to the pricing, which is the valuation, which is also quite important, how is the market price determined once a note is issued? So basically, there, what happens is, let's say we have again an AMC trading on equities, right? And for that, of course, there is a custodian bank. So what we do is every end of day, we will receive from the bank via API or any kind of other connectivity, the NAV of the basket. So we have our own valuations team in-house. We will apply there the accrued fees that the manager has selected, basically, deducting the small accrued for the management fee of the day, et cetera, and publish the mid price in Bloomberg and so on. So the price calculation, it's very straightforward, is basically reflecting the performance of the assets in the basket, and it is based on that price that basically the different fee calculations and so on take place, right? Of course, we do that in-house. We have all the expertise, all the systems for that, and we're also happy to not only make it available for extraction from the platform, but also, in case some of our clients have some very specific, let's say, performance fee calculation that they would like to apply, we're very happy to look at it together and find the best solution, right? Is the minimum investment in the AMC always 10K? Is there a restriction of how many investors can be in the product? So virtually, it's not a set in stone rule that the minimum investment is 10K. In theory, technically, let's say we could go way, way lower. We could even have $100 in theory, if that would make any sense, right? It's just, let's say, the universal minimum we have applied so far. And I would say for the almost 1,000 products we have, it's the most common one, right? Now, with regards to investors, there is no real restriction. Depending on the case and the jurisdiction, it might be some small restriction, something like 50, let's say, on the subscription period in the primary market. To be honest, I haven't seen even 50 or 40 or 30 so far in the primary market, but there is also a way to overcome that. So ultimately, I would say the short answer is no. Depending on the specific case, also happy to discuss what makes more sense, right? What is, if there is a replay? Yes, as I mentioned, we will post all that online. Can we choose a different depository bank? Yes, as I mentioned, it is really up to our client, or let's say the investor manager, which counterparty they would like to use for trading and custody. Of course, already throughout our notes, we have worked with many very solid counterparties, mostly in the Swiss market. I think that so far we have something like 40 or 45 different banks that have been used as brokers and custodians. Of course, as well, if our client would like to know more about with counterparties who work, etc., we're very happy to make introductions, right? But ultimately, it is the choice of our client. Now I'm scrolling through the questions. We have more than 50 outstanding questions, so I will do my best to go through them. How long does it take, etc.? We have gone through that. How to answer regulatory. So a question that has come in quite a few different ways is, what is the regulatory requirement for somebody to operate and manage an AMC, right? So there, actually, it's quite a simple answer. The manager of the AMC can basically be in the jurisdiction that they are based, right? Now, we as Gen2 and subsequently the bank that will be called upon to open the trading account, etc., the only thing they will ask is, in the jurisdiction that the manager is based, what are the requirements locally for him to run such a strategy. Some jurisdictions are a bit more strict than others. We as Gen2 don't have, let's say, say on that. It has 100% to do with the local regulatory framework. But as the AMCs are not considered collective investment schemes, such as the funds are, that means typically that you don't need to have the fund management license, but some kind of advisory or other, let's say, money management license, right? Again, this is not for us to opine on, let's say, of course, we can talk about what we see in the market, but we are not, we cannot be called upon to confirm something like that. So typically, if our client has not run an AMC before, what we say is we can provide some kind of insight of what we have seen, and then we would most likely say, okay, it probably makes sense to contact a local law firm just to get a reaffirmal of, you know, whether what you have in mind is makes sense and whether your current regulatory status is sufficient for you to run an AMC. Another question which is actually quite interesting, can clients invest through AMC at any time, or there is a defined subscription period? Very nice question, and thank you very much for that. So basically, every AMC, as it's a structured product, it has a subscription period in the beginning, whereby the investment process has not started yet. Thus, the AMC is purchased at face value, 100%. That subscription period can be from, let's say, as short as 3-4 days, or it can be 3 months or 6 months if we're talking about usually illiquid assets, right? That is the choice, of course, of the manager of the AMC. So throughout the subscription period, the book runner, let's say the paying agent of the AMC, will collect the subscriptions from the custodian banks of the investors. At issue date, all these subscriptions will be materialized and the money will flow into the account of the AMC, from which point onwards the trading will start and also the live price will kick in, basically. From that moment onwards, as it's Swiss security, it's still possible to increase or decrease the size of the AMC at any moment, which means that for the, let's say, default case of a liquid AMC, somebody will be able to purchase the note at the at NAV, basically at the trading value, right? And there the settlement cycle is usually T+2 business days, which means that, for example, today it's Wednesday, sorry, I had to look at that. Today is Wednesday, and assuming that there are no bank holidays until Friday, assuming now somebody would enter an order for a liquid AMC and the manager of the AMC accepts the order, on Friday we will have a settlement and the cash will be transferred, right? So it's a very seamless exercise. Another question, whether we can have loan to value within an AMC. So let's say somebody raises, I don't know, let's say 5 million from his investors, and then he would like to get some leverage on that from the bank in order to increase the performance. This is possible, of course. Ultimately, an AMC is nothing else than a trading account which is wrapped in a security, right? So that people can invest. So of course, the amount, the level of the LTV, the potential interest overnight, etc., that the bank will give, it has to do 100% with the bank. So for us at Gen2, it would still be an AMC, and then it would be between the manager and the bank to define what are the levels, how much would the interest be, etc., etc. But yes, it's absolutely possible. With regards to due diligence on investor level, so once again, every note has a legally binding document, which is a term sheet, right? In the term sheet, all the relevant information will be mentioned, plus, of course, the, let's say, positive target market for the specific note. That means that the manager who runs the note, when he receives an order from a bank, first of all, due to banking secrecy, he will not be aware of the name or the names of the end investor or investors behind that order. And B, because of that, he will be basically relying on the banks, the custodian banks processes, AML, KYC, etc., which is anyway by definition what any bank would do, right? So that means that the whole, let's say, AML, KYC burden that normally somebody has to do when he or she is onboarding a client does not exist anymore when we are dealing with securities. And maybe one last question. So in which countries can the AMCs be distributed? What are the requirements? So at the moment, the only, let's say, hard restriction we have as Gen2 is actually something that is shared with many other participants in the market, is we cannot have US persons purchasing one of our nodes. This is an ongoing project, actually. We're working on that to enable, but at the moment, it's not possible. Besides that, we can have basically any bank who is able to settle DVP, delivery versus payment, around the world buying the node. Now, of course, there is one aspect is whether a bank can legally or economically buy a node. Yes, they can settle. The other, of course, one is the commercial aspect, right? So, of course, we have seen and we expect that some banks around the world, also depending on how much they're into securities or if they have their own issuance program, etc., might be that they don't want to buy a certain node. There are solutions for that as well. But from the, let's say, setup and legal point of view, there is no, let's say, technical or legal issues why a bank around the world would not be able to book this, right? And maybe just one last question with regards to the minimum size that, you know, for which an AMC would make sense to be set up, etc. Right? So as Gen2, we won't really impose, let's say, hard minimums. We won't say, okay, if we don't have at least 5 or 7 or 10 million in subscription, we will not go ahead with the product. We rather have a fee structure which ensures that the minimum fees are covered, so that the accounts can be opened, obtain the ISIN from SIX, etc. And then it will be a win-win situation for us and our client once the assets grow. So having said that, I would like to really thank everyone for your time. Once again, we're extremely happy to see such positive reaction from the market and also such engagement in the questions afterwards. I'll be very happy to take it up bilaterally with several of the people that had some more elaborate questions and discuss over the next few days. Wishing everybody a fantastic afternoon, and we will definitely be in touch. Thank you very much. Bye-bye.